What's going on, everybody? Ronnie Withager. Thank you for jumping on today and spending some time with me. I was just thinking about in my practice how I'll have people who will come to me and say at times, "Hey, I never knew about that," or "I haven't heard about that before," or "Why didn't you tell me about that?" And this is kind of just building on the purpose of why I'm doing something like this. I want to make sure that I am pushing as much information that's in this big head of mine out to the masses. I want to make sure that you are getting the information that you need to save money on your taxes. And so that's a big purpose of why we're doing these live streams. So if you're listening live, that's great. If you're tuning in later and listening to it later, I hope that you'll find a bunch of the content that we're going to talk about today to be valuable to you. Feel free at any time to go into our chat function here and just drop a question in there. I've put a couple questions in there that were sent to me, and I have a couple questions that people have asked me over this week. And so there's going to be a few things that we'll go through today, and I'm looking forward to a productive call. But I want this to be your time, not necessarily my time. And so I'm here for you to be able to go through whatever challenges or things that you want to hear my opinion or knowledge on. So let's get started. We've got a question about a vehicle and how to write off a vehicle and the different things that maybe happen, because there are different ways to do it. It says mileage is tax deductible. I know that. I assume paying for gas is not necessarily true, but I'm going to get into that. Companies give employees gas cards. Is that an expense and have no tax implications? Is paying for gas just part of an employee's compensation? So let me kind of unwind a decent amount of that there. There is a few questions in there that I want to discuss. First, you're going to have mileage as one way to take a deduction for business auto use, or you're going to use an actual method. An actual method is focused more on the amount of business mileage that you have and versus the amount of personal mileage that you would use in your business. So you may have a car, you may use it for personal use, you may use 100% for business use. If you use it, whatever percentage you do use it, because you're going to keep a mileage log, you can write off your gas, your repairs, your maintenance, and all the things that you're going to spend money on for your car. Now, if you have an 80-20 business percentage, then you get to write off 80% of your gas. So, and the other actual expenses. So, we always make sure that everybody keeps a mileage log so that we know what that business and personal use is, but I do want you to track the cost of all of your gas. Now, to kind of jump into that a little bit further, you've seen where people have company gas cards. There still has to be documentation that is kept to make sure that employees just aren't using it as their personal gas card and they have a company car that they use for personal use all the time. I'm sure businesses have to have an internal process on how they're doing that, but to answer the last question there, if there was personal benefit off of a company gas card, then that would be something that should be added to W-2 compensation and would be added to the employee's compensation. So auto expense is a great thing. There are a lot of idiosyncrasies that kind of go along with the auto deduction. So it is a question that I do get a lot, but as a CPA, I want to make sure that we get you the best deduction based on what you're doing. So we have a lot of those types of conversations about, hey, what are you doing with your vehicle? How many miles are you driving per year for business? Are you using it for personal use? These are all going to be considerations that we're going to go to make sure that you are getting the best deduction. I would say unless somebody is buying a bigger vehicle and one that's over 6,000 pounds and is trying to take advantage of the depreciation deduction, a lot of people end up using the mileage deduction. It's simpler. It usually generates a pretty decent deduction with the mileage rates that are actually going up right now. But we definitely want to make sure that it's something that we have some conversation about. Next question is, if I run my business out of my home, what are the things that I can use to benefit me on taxes? Internet bill, water, power, square footage of the area that I use. Do I just pay these bills directly from my business? All right, so the home office deduction is going to be another really good tax deduction that you can use, and more people are working from home now. And we should be clear that if you're a W-2 employee and you're working for a company and you work from home, right now there's not a mechanism for you to write off your home office. If you're self-employed and you're using your home, there is a mechanism of doing that. Now, you hit on it. You ended up mentioning, do I use the square footage of my home? You are going to use the square footage of the area that you're using exclusively for business, and then you're going to compare that to the square footage of your home. So, let's say you have a 2,000 square foot home and you measure out your office space and you're sitting there with 200 square feet. So 10% of your home is your home office. What you're going to do from there is keep that business use percentage of 10%, and then you are going to go through all your utilities. You're going to go through your power bill, your electric bill, your internet bill, your water bill, your sewer bill, your trash. You're going to go through all the expenses of the home and tally all that stuff up, and then we're going to be able to take a home office deduction on it. I like to do a reimbursement. I like to tally all that sort of stuff up and then have the business reimburse you for the portion of the home that is being used and go that route. I'm sure there's going to be situations where people didn't reimburse themselves, and so what we would do is just do a journal entry to take care of that. But no doubt there's going to be a home office deduction that you're going to get. Your property taxes, your mortgage interest, that's going to factor into that calculation as well. And it is a deduction that we can take, and I look forward to taking for people who work from home. So hopefully that kind of clarifies some of the stuff there. But there are two methods to that too, though. There is a simplified method and there's an actual method to that. So like I had mentioned, you can tally up all the expenses of the things that we just talked about, take the 10% business use, reimburse yourself for it. That's one way to do it. Another way to do it is the IRS gave a simplified method which says we'll give you $5 a square foot, and you don't have to do any calculating of the utilities or anything like that. $5 a square foot up to 300 square feet. You want to get a $1,000 deduction on your 200 square feet, then it's pretty much automatic. So that's some information on being able to write off the home there. Next question is, with a very small starter business, are we required to do quarterly taxes, or can they be done once a year? So quarterlies is always kind of this buzzword that a lot of business owners, new business owners specifically, will hear a lot about. And the quarterly filings that you're hearing about are going to be a result of payroll. Payroll, if you're paying yourself as an employee through your business, there are quarterly forms that are filed. They're the 941 payroll form. And that just outlines how much payroll has went through your business for the year or for the quarter. And so that's summarized, and taxes are remitted and all that sort of stuff. But quarterlies is kind of this thing that people get nervous about. But if you are running payroll, you're probably using a payroll company or you're using a software. So if you have ADP, which is a place where I push a lot of my clients, or if you're using QuickBooks, Gusto or something along those lines, the platform actually takes care of filing and remitting the quarterly payroll taxes that you would be required to submit. You don't have to necessarily do it every quarter, but most people do. And if you're small enough, you really could pay yourself like once a year, maybe towards the end of the years, and file 0 quarterly for the other quarters. But those quarterlies are going to come through payroll. Another place that maybe they might be coming from when you hear this word, do I need to do anything quarterly, might be related to estimated quarterly payments. When you're self-employed, you're likely, not in a situation where you're receiving a W-2 for all the money that you're making, and you're likely just in a spot where you're not necessarily getting those taxes paid every 2 weeks along with your check. And so this mechanism of a quarterly estimated tax was kind of put into place because the IRS wants their money throughout the year. They don't want you waiting all the way till the end of the year when it's filing time for you to stroke a check for, all the taxes that you owe for the year. So if you went and were self-employed and you made $50,000 and now you owe $10,000 in tax, they would want you to pay $2,500 per quarter so that you don't owe the $10,000 tax bill. Is it required? Yeah, it is. They'll penalize you a small percentage if you don't do it. It's like between 1% and 2%, but you don't have to do it. There's a lot of people who do not pay estimated quarterly payments, and they just pay whatever they owe at the end of the year plus the penalty. So those are the two types of quarterly type thing. When I hear people asking me about quarterlies, it's payroll related, and then it's just keeping track with the taxes that you were gonna owe from your self-employed income. If you are a W-2 employee for a company though, there's nothing quarterly that you usually will need to pay. All right, I got a question just earlier today where somebody asked me, I moved from Las Vegas to Utah, and do I need to move my business? Like, how does that work? They're going to be working out of Utah. They've got some people that work in Nevada still. The business was set up in Nevada, but Nevada's a tax-free income state tax. So, but Utah's not. So there's a little bit of confusion there as far as how to handle that and what to do, especially because it's a mid-year type thing. Not really clean, not a lot of cutoff there. So kind of how does that work? And so I want to take a little bit of time and just answer that, because there are a lot of people who have been moving, and how does that work with the different states? So because Nevada is a tax-free state, a lot of people try to set their businesses up there, and they think that if their business is set up in Nevada, then they won't have to file any state taxes, which that is not entirely true. If you have employees or you have business and sales in other states, if you're working in other states, there is technically some mechanisms in place that say you would have to file in those states. You may likely see that with like pro athletes being in a situation where they work in a lot of different states. They have to pay taxes in all the different states that they work in. And so we're kind of similar to some degree, but when you move your personal residence, you're the owner of the business. Now you're moved into Utah, which does have a state tax, and I know the answer to this because I've done this myself, but you're suddenly going to be in a situation where you can keep your business in Las Vegas. You can keep it registered there, keep corporate headquarters in Las Vegas. There's no issues with that. But if you've now started working in Utah, you have to foreign file your business in Utah. And because now you have salaries, you have a worker, even though you're the owner, you're still an employee, you have wages, you're creating business, you're doing your work out of Utah now, so you have to move that income and expense over to Utah as well. So what you would do is you could keep your Nevada if you want to keep it, because they have favorable business laws, but you're going to foreign file in Utah, and you will still have to create a Utah tax return, and you'll allocate, it's called apportionment, but you'll apportion the income that is apportionable to Utah through the tax return. So if you move states, this becomes an issue when you're in a tax-free state and move to a state that does have taxes, because you don't really want to, you're used to not paying state taxes, but it's best to foreign file, it's best to move it over, it's best to work with your payroll company about withholding taxes in the state that you now live in, and you become an employee in Utah now. So definitely taxes that will need to be withheld and all that sort of stuff, but that's kind of how that works. So you could be registered in multiple states, and but the complicated stuff that we do behind the scenes as accountants is the apportionment of what income is going to each of those states. All right, so that was a good question. We're in the middle of the year right now, and middle of the year planning is something that I'm starting to get some requests on. A lot of people don't want to get caught with their pants down and want to be ahead of the curve. And so, I want to just take a minute and talk about what I would do, with year-end or mid-year planning. And I actually did a mid-year planning call this morning. A lot of times what we like to do is just kind of have a check-in. We want to check in and see how the year's going. If business is booming and you're just taking off, that's something that we definitely want to know. That way we have time to get our ducks in a row and make sure that we implement strategies before the year is over. And for me, I'm the type of person where I think that the fourth quarter planning, so like your October, November, December, that planning is the most important. So a mid-year type thing is a check-in so that we know what type of stuff that we need to be getting on our radar. So what I'll typically do is look at your bookkeeping. I want to get an idea of where your numbers are at. We can do a little projection so that we can kind of see, how much taxes you're going to end up owing, what kind of quarterly payments you may need to be making. And we would go through just some general ideas and kind of start the building blocks of what that tax plan is. But for the most part, we just want to do a check-in where we're getting you staying on track and making sure that there's not going to be any huge major surprises. And if there are some real moves that you need to be making right now, then we're going to do those things. So the way that I kind of explain it is a little bit more of a laid-back approach when it comes to mid-year planning. But then once it comes to year-end planning, that's something that we want to hit really hard and make sure that all the strategies are implemented before the end of the year, because we do have a really good idea of where your income's going to end up in the end of the year versus in the middle of the year. So a little bit more laissez-faire right now, but a mid-year check-in is never a bad idea, and something that your accountant, or if I'm your accountant, should totally welcome. I had a client who, this was kind of interesting this week, who ended up getting an audit request. So they got pulled for audit, which was actually a little surprising because it was a very simple return that they got audited for. But everyone is going to get scared when you get that audit request. It's totally just the nature of a human to get that heart beating a little bit more when that audit request ends up coming. And so I wanted to just chat a little bit about the audit requests. We might be in a situation where now that COVID is over, maybe the IRS is going to start turning up audits again. That was kind of one of the things over the last couple years, though. I haven't seen an audit, and I mean, I'm knocking on wood on that, but I haven't seen an audit in a couple years for sure. So, this specific client responded to it quickly. Right when they got it, they touched base with me. That's super important. You never want a situation where you're getting these notices, you're ignoring these notices because you just don't want to deal with it, and then you're months into this thing or past the deadlines that they were looking for, and you're just now starting to talk to me. So right when you get them, it's super important. Just get on the ball right away. Make the phone call right away to the agent that's on there. Let them know that you're aware of it and that you're going to end up, getting the requests together of all the things that they wanted. So anyways, that's what ended up happening. He called me. I told him, okay, you know what? I'll start working on a power of attorney form so that I could represent you. And then I said, give your auditor a call. Let's schedule a call all together and go through the items that he's going to want to see. To me, in my experience with the audit process, the most important thing is having all the information that they want to see. If you have all the information that they want to see and you're very organized, the audit process goes really, really smoothly, and in my experience, it's very, very easy. If you don't have any of the stuff and you're late and you're ignoring them and not staying on track, that's when it ends up getting messy. So I wanted to just kind of, not to scare anybody, but I do want people to know that audits are a part of life. This guy, he asked why he was getting pulled for audit, and they just said it's random. There's nothing specific in there that flagged this. It's just a random look to make sure that you were doing the things correctly. So if it's just random, I mean, I don't want anybody feeling picked on. I don't want anybody feeling super nervous. But unless you were doing something really shady, then that might be the case. But if you're not doing anything shady, there usually is not anything that you really have to be totally stressed out about. And that's the spot that we want to be in. I kind of had to calm his nerves a little bit. A lot of the things that were in the request were things that we've already asked for. So we're looping in his bookkeeper, and we're all putting together all the stuff that's on the list. And so it should be a couple week process. And once we give kind of the information that they've all requested, they look through everything. If there's something specific that they want to look a little bit closer on, they'll send follow-up requests and say, hey, we want to see specific receipts on, maybe these 3 things, and then you may have to go digging through some of your stuff. But there's not really a big reason to be super stressed unless you have something that's really uncertain on your tax return that, may require, some kind of advanced defense or something along those lines. So another thing that I've seen this week is just, possibly, a sign of the time as far as us getting through COVID, which is, the IRS may be coming back to do a little auditing. Let's see. I've kind of been spewing off some stuff here. I'm kind of just checking the list here to see if there's any other questions that have popped in. We will go for a few more minutes here, but if you have any questions or follow-up questions, maybe one thing that's important to mention is if some of the stuff that I'm saying right now yields additional questions for you, feel free to just drop that into the chat bar there, and I will clarify, or if I didn't answer one of the questions that you put in well enough, then feel free to just ask me to expound on it. But the last thing that I'm going to talk about, if I don't see any other questions, is the big scary what to do, what to look for if you were going to buy a business. Buying a business or selling a business for that matter is something that I've seen a little bit more over the past couple years. There has been some people who have been anxious to sell their business and kind of ride off into the sunset and leave it for the next generation. And so a lot of times I get that phone call, and it's one of those things where it's like, well, what how do I start valuing this business, or how do I know what to sell my business for? How do I know if I'm getting a good deal or not? And so there's definitely mechanisms out there where there's people who do valuations. There's people who specialize in as business brokers and all that sort of stuff. And there's definitely expertise out there that is set up to help. In the end, when I kind of come into it, it's one of those things where it's like, well, hey, you're my numbers guy. You're the one that is going to look out for me on taxes. And so where I find myself a lot of the time is just kind of negotiating some of the number side of the deals here, where it's, is it going to be an asset sale? Is it going to be a stock sale? Is it going to be somebody that takes over the entity, or is it going to be somebody that's just buying your book of business and incorporating it into their own? How can we get more capital gain treatment versus ordinary income treatment? So I kind of get into some of that, but a lot of times people would want me to say, hey, what's the price of this thing? What should I be selling this thing for? And for me, a lot of times when it comes to the business deal, a lot of times, even though there is some ways to value a business, you really are going to sell your business for what somebody's willing to pay for it. And so there is some wiggle room when we're looking at, asset sale versus stock sale, or maybe even a combination of that. But I find it pretty fun to be able to kind of get into the weeds on some of that. I also do like when there are people who, maybe are being brought on as partners, and might have situations where like they're going to get some stock, or it's all about calculating, kind of knowing those numbers and seeing those numbers and getting an idea of how long it's going to take you to recoup your investment, or how long would it take for with the money that you're making right now, how many years of work are you giving away by selling the business. So I'm kind of here when it comes down to that type of stuff to just kind of give you that cost benefit analysis from all those sides. And so those are some of the things that I've seen just in the past couple weeks when it came around to buying, selling a business, and that kind of exciting step that people will take. For me as an accountant, I've worked with hundreds of different businesses and have seen a lot, worked through tons of different sales transactions, and so for me, I kind of have a unique perspective when it comes to the whole idea of selling or buying your business. So if you're in situations where you're looking for that kind of stuff and want some advice or want to explore that kind of advice, it always really is good to just chat with somebody about the different ins and outs and things that they could be looking for, and ways to kind of get an advantage on making that sale. This has been fun. This is good. Maybe give it another second and see if there is anybody else that has any questions. I do want to plug Prosperity Society. You've seen me sending out emails. You've seen me doing specific videos. And something that I've been thinking about as people have been signing up for this is something that really includes a couple layers of buy-in. And for me, one of the things that I'm committed to doing through doing this is creating a lot of video content that is built around what questions you guys have. And so when I get calls and get questions, I'm jotting those questions down and saving them and doing videos so that people can become knowledgeable. So it requires a lot of buy-in from me. I'm going to be spending time each week creating videos so that you have more and more information at your fingertips. The next layer of buy-in comes from you. There's got to be a situation where you're like, hey, I'm actually going to sit down and go down this path and listen to some of these videos and pick the topics that are something that I need to have more understanding on. And so there requires a little bit of buy-in on your part. The other side of the buy-in comes that, I'm charging $25 a month for it. Now, I think it's very fair to be able to do that. And I think that as I've talked to people, my understanding here is that there is a lot of interest in this as long as you're going to be as long as there's a lot of interest in this as long as people are going to have that time to look at it. So that's why I kind of say that there is buy-in on both sides here. There needs to be that buy-in from me. There's got to be that buy-in from you to kind of continually do this. And I know a lot of you guys are going to watch this later and that sort of thing. So keep those questions pumping for me. Make sure that you're that you're part of your tax plan. There's so many people that just want to hand off their tax situation and they think that it's all just going to magically work itself out. And it really just doesn't work like that. You have to have some commitment to your tax plan. And so, I want you to check out the website. I want you to kind of go through that. I want you to see some of the stuff that we've been doing on here. And if it's one of those things where you don't feel like it's worth it for you, then you could cancel it at any time. But I would love your buy-in as this community ends up growing and getting bigger. I know it's going to get bigger and bigger. And this is going to be a major way that I handle the consulting practice. So make sure that you just go through that website, click through it a little bit, check out some of the different things that we're doing and some of the different videos. You can kind of see in the background here where I have some different categories. The Prosperity Society vision is bigger than tax too. We're going to get more into investing. We're going to get more into life skills. We're going to get into other things that are going to be valuable to the individual. But I am grateful for the time that I could spend right now to do these different things. Some of the feedback that I've gotten so far is really good. Out of the hundreds of people that I'm sending this to, only a few of them have unsubscribed from my emails. But so keep opening those emails, keep educating yourself, and keep spending some of that time making sure that that you are part of your tax plan. So grateful for the time today. I'll do another one in August, and we'll keep you posted on that. But as for next week, we're just going to have more videos pumping out there on things that are meant to save you thousands and thousands of dollars on your tax return. Thanks so much for the time.